Wanted to talk a little bit about condos and in particular FHA 2 to 4 unit condo approval because it's something that comes up frequently enough and it's a totally different animal than other FHA approval process. Hey, it's Chad Rankin with the Rankin Mortgage Team in Worcester, Massachusetts. We are, as a lender, delegated by FHA and HUD to underwrite these types of properties ourselves. And so we just have to adhere to specific criteria. And there's a few really key bullet points that if we document these and we work up front with the seller, that's probably one of the most important parts, this listing agent and the seller, to make sure that we can achieve these, then I can get just about any 2 to 4 unit FHA approved in a very short window. But I want to go over those few bullet points with you now. In a traditional condo project, there's a homeowners association, HOA, and then typically an HOA fee, which covers maintenance and so on and so forth. And they can range from under $100 to $500. So that also impacts folks' debt to income ratio and can significantly determine, what their purchase power are. For example, I may be able to pre-approve somebody for a $300,000 single family home, but on a condo, they may only be eligible for $225,000. We see that scenario quite frequently. And so that's where it becomes very interesting with the 2 to 4 units because there's no HOA required, there's no HOA fee required, but there is a memorandum of understanding that is required between the owners. So for example, if that does not exist, and usually it doesn't, to be honest with you, that needs to be completed prior to loan approval and closing. And so, what that covers is kind of some common sense stuff that would normally be covered, which is, the fact that we share walls, we share grass, and who's going to do what? Are we going to naturally be splitting the master insurance policy? Of course. On top of that, I just mentioned master insurance policy. That's another bullet point where traditionally you've got master insurance policies on, condo projects, 10 units, 50 units. It's commonplace. But what we find is sometimes on 2 units in particular, duplex style properties, people almost consider and they think, even if they own it, even if it's technically and legally a condo, they may think that it's a single family attached, but no, it's not. And so what is the best insurance that you could have on that? That would be a master insurance policy. In fact, it's required, of course, to get financing. However, sometimes there are insurance companies that actually will give each of those owners their own insurance policy. But the truth is that they're not properly covered. If somebody is visiting your neighbor on the grass that's next to your neighbor's house on the other side and they get injured, well, at the end of the day, and I'm not an insurance professional, but I can tell you, I've spoken to many, at the end of the day, if you look at the plot plan of that property, it's still your grass. And so you should have a master insurance policy. So that's a conversation that if they don't, I'll be speaking with the listing agent about that and put them in touch with a very knowledgeable insurance agent to go over that. And then you would need interior contents insurance, HO6 policy for each of the unit holders. And what we find is that when it comes down to it, one master policy might cost $1,500, for example, and then maybe $250 for each interior contents, maybe $2,000 between the two. What we find is that each of those individual unit holders were spending about $1,000 themselves anyway. So it may very well be a wash. That's what I've seen over the years. And to go along with there being no homeowners association required, no HOA fee required, there's also no budget required. There is in 5 units or more. We have to document what that budget is annually. And then we also have to document that the association has a minimum of a 10% reserve on hand at all times for anything that goes wrong. Essentially, the 2 to 4 units are of less risk is the way that we take it. And so therefore, we don't have to document it. FHA doesn't require it. That's where the memorandum of understanding comes in. And holistically, the 2 to 4 units work together to make sure that all is good within the small little community there. Another key element is that there cannot be over 50% ownership from investors. Obviously, in a 3 unit, for example, only 1 unit could be owned by an investor. 4 unit, 2 units, 2 units, 1 unit, right? A caveat to that is that the seller of the property that you are buying cannot be an investor either. There needs to be an attorney opinion letter drafted as well. And so a lot of attorneys don't even know how to do this, to be quite honest with you. I've come across that many, many times. And so we use our trusted bank attorney locally to draft those letters because they are required to look and to make sure that the language of all recorded documents and public records, they all meet state, local, and HUD guidelines. And so then they have to draft a letter stating this and referencing. And so that is one element that is something that you really need an expert loan officer, lender, and then also attorney to address. And one other thing that doesn't come up that often, but should be mentioned, is that if the project, the 2 to 4 unit condo project, was a conversion and the building was utilized for something different, and the conversion took place in the last 2 years, HUD does require that we send that to them, and then that would go through the normal 30 to 45-day process of approval. However, if the conversion took place 3 years ago, 10 years ago, then we can go through the process ourselves, just like any other 2 to 4 unit condo. And so I'll give you 2 examples that just took place here within the last few months. We had one in Wales, Massachusetts. The 2 unit in Wales was pretty much exactly what I explained earlier, where they did not have a master insurance policy. Each owner had their own policy. And so they did determine, when they spoke to 2 different insurance agents, that it was wiser for them to come together and get that master insurance policy, get refunds on the remaining balances of the portions of their current individual policies. They both got HO6 content insurance. So that met the needs. There was no memorandum of understanding that existed. That was created by their attorney. And then the attorney opinion letter was drafted as well. And of course, first and foremost, we were able to determine that the seller of the property had owned it and lived there for over 20 years, was not an investor. So we were able to close that. Another example, which was about a year ago now, in Worcester, we have a lot of multifamilies. If you're from around here, it was a triple decker. And it had actually been condoized about 15, 18 years ago. I think it was about 2006. And so they took the 3 units and they turned them into a condo project. That one actually had a $60 HOA fee, which was for like snow removal, maybe one other little aspect. But it's not required, again, to have one because it was under 4 units. They did have the memorandum of understanding in place. They had a master policy as well. So that one was actually easier than even a 2-family, because they had, what was needed in place. There was one investor that owned one property, one of the units. We had to confirm that was obviously not the unit being sold. So hopefully that was useful information for you. Whenever I come across these things or see it again, it just makes me think, all right, this is something I'd like to share, instead of, just doing so again and again and again. When it does happen, I figure, get it out there for you. Hopefully it helps. If you have any questions at all, please just reach out. That's what we're here for. Again, Chad with Rankin Mortgage Team in Worcester, Massachusetts.